I'd like to talk about my favorite crypto right here. It's Ethereum. So Ethereum was launched in 2015, about 6 years after Bitcoin. And although Bitcoin is the oldest and the largest, judging by market cap, it's worth about $190 billion. Market cap is the price of the coin multiplied by the number of coins available. That's how you should judge the size of a coin. So Ethereum is number two at 100 billion, and it's been catching up. So Bitcoin was up about 2,000% last year. Ethereum was up about 5,000%. A lot of people predict that in 2018, Ethereum will pass Bitcoin and become kind of the crypto standard bearer. Now, that'll be a key moment because as of right now, Bitcoin is the main gateway to all the other alt currencies. So if you want to buy Neo or Dash or Ripple, Monero, any alt currency, you're better off using Bitcoin instead of Ethereum. So if I'm going to move from one exchange to another, my currency, I'm going to use Ethereum because the transaction costs are lower and the transaction is confirmed faster. But after I've moved Ethereum to that exchange, I'm going to convert it back to Bitcoin because the spreads from Bitcoin to other alts, especially the small alts, is much smaller because the volume is much higher. So from a day trader's point of view, we would say that Ethereum is more thinly traded. So the spreads are higher. So the transaction costs are going to be higher to trade in Ethereum. But that can change, and it will change when Ethereum passes Bitcoin in market cap. So why is Ethereum gaining ground on Bitcoin? Well, Ethereum has several technological advantages over Bitcoin. Okay, you may have heard that Ethereum is a smart contract platform, right? So how does that work? Let me give you an example. I have just a small investment in one coin called ETHLend. Okay, that's ETH Lend. So what they do is they allow for crypto-backed loans. So suppose I want to borrow 5 Ethereum. So if I back it with my own 5 Ethereum, I can borrow 5 Ethereum. I pay an interest rate of perhaps 1% per month, which is reasonable for this kind of loan. Okay, so the reason that people might want to borrow in this way is if they want to buy an alt currency without having to sell their currency, then they're willing to put up their currency as collateral so that they can maintain that currency and still speculate on another alt currency. So everything is automated. So if the loan isn't paid back, which in this case would be senseless because you're putting up 100% collateral, which is pretty common in these ETH-Lend loans, then their blockchain will automatically credit the lender with the collateral. So the borrower will automatically lose their collateral if the loan is not repaid as agreed. So this is a great idea. Another idea is Augur. Very, very straightforward. It's a probability market. So for example, if I want to someday wager on the Warriors game and they have a 70% chance to win, I can bet, $100 on the Warriors, and if they win, I'll get paid approximately $130 in theory automatically by the blockchain. Now, I don't think this is up and running the way that ETHLend is, but you can see the potential, right? So besides the being a smart contract platform, they're also a platform for launching other coins. So after the launch of Ethereum, you saw thousands of we call ICOs, initial coin offerings, like as opposed to IPOs for stocks. With crypto, you have ICOs. So Ethereum allowed this to happen because Ethereum made it easy for companies to ICO their coin. There's thousands of coins that are based off of the Ethereum platform. These are called ER20 coins. They're basically Ethereum compatible coins. So Ethereum has a lot of advantages. Another advantage that Ethereum has over Bitcoin is scalability. So Ethereum has a roadmap for increasing scalability, which ultimately is going to transition the blockchain from proof of work to proof of stake. So it's kind of complicated, but basically proof of work is what Bitcoin popularized. The whole system of miners doing energy-intensive calculations to prove that they have basically the raw horsepower to be deserving of a reward. And just kind of as an aside, they're verifying transactions. That takes very little computational power. So the main thing they're doing is securing the network by ensuring that nobody has the processing power to execute a 51% attack, because it would be too expensive to get billions of dollars worth of Bitcoin mining rigs. So with Ethereum, when the Casper update comes out, scheduled for summer of 2018, the plan is to shift gradually from a hybrid system of proof of work and proof of stake into fully proof of stake. Now, the benefits here is that instead of forcing people to do energy intensive calculations, the transactions will be verified by people who put up Ethereum as collateral. So this is a brilliant idea, because basically people are not going to rig a system they already have stake in. So suppose that I own 1% of the Ethereum. Suppose I have $1 billion worth of Ethereum, and Ethereum is worth $100 billion. Now, if I put up my $1 billion worth of Ethereum, 1%, when the Casper update comes out, I'll be paid a dividend which is proportional to approximately 1% of the overall transaction fees generated by Ethereum. So it'll probably be a little bit less because there's going to be loss in the process, right? So this is a great idea. Ethereum is already up to $2 billion per year in transaction fees. If you compare that with Bitcoin, it's more or less equal. So Bitcoin's fees are higher, but they do far less transactions. So Ethereum does currently 1.2 million transactions per day. Bitcoin, approximately 300,000. But if you compare that with just a month ago, Ethereum has doubled its number of transactions, whereas Bitcoin's stagnant because they've hit the limit, basically, with no real solid plans for scalability in the near future. You know, Lightning Network seems way off, whereas I think Ethereum will beat Bitcoin to Lightning Network with their own version, either Plasma or Raiden. So basically, Ethereum has already passed Bitcoin in transactions per day. They're currently doing 4 times the transactions per day of Bitcoin. And they just recently, last week, passed Bitcoin in dollar figures transaction per day. Now, that's a big one. So just a few days ago, they did $30 billion worth of transactions, whereas Bitcoin did 20 billion. Now, Bitcoin's since passed them again, but it was a big landmark, and it shows you that Ethereum is really gaining ground. So back to the transaction fees. People say that there's no way to value cryptocurrency, but my favorite way is to look at the transaction fees generated annually. So Ethereum, with their current daily transaction fees, if you look at 1.2 million transactions a day, and then you multiply it by 365 days, you come up with about $2 billion worth of transaction fees, okay? So if you divide that by the market cap of Ethereum, the value of Ethereum at $100 billion, that's a 50-year return on investment. Now, that would be considered high for a stock, but it's not unheard of. So Bitcoin, on the other hand, has almost double the market cap with similar transaction fees and less growth potential. Okay, so now remember, this is just an illustration of how much people are willing to pay in order to do transactions on the Ethereum blockchain. Once Casper comes out, the transaction fees will go way down, probably to pennies, and that won't be the actual transaction fees generated, but it shows the potential. Okay.